Hi dear traders, the US dollar is making a pause in its stunning rally after it reached a 20-year high. Speculators are taking profits on long positions of dollar-involved trading instruments. The greenback is taking a breath in the week full of high-impact events. Meanwhile, the US Fed is sending hawkish messages about its commitment to aggressive rate hikes in an effort to push inflation down to the annual rate of around 2%. In this video, we will tell you what are the events which are due in the last 2 trading days might influence market sentiment. For a start, another portion of news from Germany, the powerhouse of the European economy, will bring traders nothing but disappointment. According to flash estimates, Germany's consumer inflation is expected to accelerate to 9.4% annually in September. It will be the fastest inflation rate recorded since the reunification of West and East Germany in 1990. This dismal report will certainly trigger a sell-off of the single European currency. Importantly, the euro will come under active selling because traders are braced for similar gloomy data for the whole euro bloc. The European CPI will be published tomorrow, so we will discuss it later. On Thursday, investors are anticipating the revised US GDP for the second quarter. Let me remind you that the second estimate was a bit stronger than the flash data. The preliminary data suggested that the US GDP shrank by 0.9% sequentially in the second quarter, but the second estimate revealed a milder drop of 0.6%. Let's see how the revised GDP might change. Importantly, the Treasury Department reviewed its criterion to acknowledge a recession in the domestic economy. From now on, contraction in the national economic output for 3 quarters straight, not 2 quarters, will confirm a recession. Hence, forex traders are likely to neglect evidence of the negative trend in the economic output. Besides, currency traders have already adjusted their decisions to recent remarks by Fed's policymakers who repeated that the central bank would go ahead with rate hikes even despite a slump in the stock market and the recession threat. It means that the GDP report will make an impact only on Wall Street. In contrast, traders and analysts are always on alert to every macroeconomic report from China. They are especially sensitive to the metrics of China's industry, the key economic sector. On Friday, market participants will find out that China's manufacturing PMI still remains below the threshold level of 50 points, which separates contraction from expansion. According to flash estimates, the PMI for large factories will stand at 49.8 in September. Oil traders will be especially vulnerable to this information. China is the top energy consumer in the world. Apparently, a slowdown in its factory activity is a clear-cut sign of lower oil consumption. In turn, the currency market will respond to the news with sell-offs of the Australian dollar, the currency of the key commodity supplier to China's industry. The flash CPI report for the euro area will be on tap during the European session. In the context of the raging energy crisis, analysts predict another dismal score. The flash PMI is expected to jump to 9.7% on a yearly basis in September. No wonder, on the back of such rampant inflation, the ECB will have to raise interest rates at a more aggressive pace to prop up the euro. However, traders see the difference between the US dollar and the euro. The euro is extending its weakness because the eurozone has lost its shine for investors due to sky-high energy prices, the military conflict in East Europe, and political instability in light of the snap general election in Italy. Traders will find another excuse to buy the US dollar following the report on US consumer spending. Notably, consumer activity accounts for 2/3 of the US gross domestic product. The forecast is positive as consumers are poised to increase spending, albeit by an uptick despite high prices. Nevertheless, it's good omen that the US economy is showing remarkable resilience, ready to recover. Thus, good economic prospects will be another factor to boost demand for the dollar-denominated assets. These events are going to be in the limelight among investors in the second half of this trading week. And let me remind you that you can learn all the latest news from our daily reports on InstaForex TV channel. See you!